Welcome to realtraders.com.au. Now, I wanted to produce this video for your educational enjoyment and to show you just how quickly money can be pulled out of the market, ladies and gentlemen, using the indicators the professionals use. Now, these indicators are different from the indicators taught in the mainstream retail trading seminars. And when it comes to profitability, there's a thin line between being a profitable trader and a losing trader. And what it comes down to is that the retail trader is taught retail indicators. That's why the retail trader has such an awful time moving into profitability. What's lacking in the Australian marketplace is professional stock market training. Yes, there's plenty of education firms out there with charismatic speakers at the podium promising you incredible results if you just take their training, but all the results are hypothetical. The trades have not actually been executed in a live market environment. I've yet to meet a losing hypothetical trader, and I tell you what, it's very easy to trade when the bars or the candlesticks are not moving. Many educators have all the theory in the world, but fail to roll up their sleeves and get their hands dirty in a live market. I'm one of the very few people in the industry who's prepared to show you real trades, my real trades, backed up by my real trading statements. So let's have a look at one of these trades. Now, this is my email inbox to where the clearing firm sends my daily statement for one of my accounts. Now, the first trade that we can see here was at 1937. That's not New York Eastern Time, that's Greenwich Mean Time, and it was for a market buy order on the US 30 or the Dow Jones, which is the mini Dow, for 10 contracts. Now, where's my cursor gone? I'm just trying to find the cursor again. There it is. 10 contracts at a price of 10,832. And then 2 minutes later at 1939, I executed a market sell order for 10 contracts at 10,997. That gave me a profit of 165 ticks in 2 minutes. Now let's have a look at the trade. Now the symbol in the upper left hand corner is YMZ81. YM means the mini Dow. Z8 is the December 2008 contract. 1 represents the time frame. Each bar on this chart is a 1 minute bar. Now, prior to the FOMC announcement on Tuesday the 16th of September, price was just meandering sideways. Everybody was waiting in anticipation for the FOMC announcement. Now, as the announcement comes out, obviously the reaction here is negative. Price surges to the downside, about 110 points. It stalls at the S1 pivot level. It retraces into that bearish surge to the downside rather bullishly, because if it stayed below the 50 point or say like 50% range of that bar, it would have been a good indication to go short on the next lower high. But because it probably went 70% into that bar, it suggested changing the bias to a more neutral level. Now, as price pulls back, where's that mouse gone? It pulls back to the downside here and tests this prior pivot low. It's a place where buyers will step up, and as you can see, as price moved down there, it formed these long lower shadows on the candles or bottoming tails, indicating that buyers were stepping up. Price then subsequently moves back up to the upside. It tests this prior selling reference point, this pivot here. The red box indicates that that's a resistance area. And as it tests that, the sellers come in and drive price back to the downside. But you can see that the price pattern here is rather orderly in nature. Each bar is getting smaller than the prior bar, indicating pullback momentum is slowing. It reaches S1, and as it reaches S1, this little green indicator down the bottom here is the Dow ticky. It surges to the upside. It turns green, indicating that more than 25 of the Dow's 30 stocks traded to the upside. So that was another indication that the buyers were stepping up. So there's a little price pattern here. So as we see the buyers step up, it's retesting S1, typically where the buyers do step up. We can see that price forms 3 equal pivot lows. So every low there is equal. Then price breaks to the downside, it pops to the downside, and then immediately pops up back up to S1, and that's accompanied by another tick surge. So more than 25 of the Dow's 30 stocks traded to the upside, which is an indication of buying power, and price advances to the upside significantly there. And with a price bar like that, typically if there's very little retracement into it, it suggests holding on There we go. It suggests holding on, and I did, and we got another surge to the upside. I was looking for a further third surge to the upside, but it didn't happen. It popped above it, initially popped above it, then formed a small little tail, turned red, indicating the sellers had turned up, and I exited there at 10,997. So that trade produced a profit of 165 ticks. Ladies and gentlemen, this library of free videos will continue to grow. I'll be designing videos to contain substantial quantities of really good, valuable, free information, so that if anyone is currently trading the Eminis, they can walk away with a strategy that can be implemented into their trading plan and immediately see an improvement in their profitability. Some of the topics in the next video to be released will be surviving the learning curve, the trading plan cycle, trade management, and more. So if you'd like to access more videos, just register your interest at realtraders.com.au or emini.com.au, and the moment a new video is released, we will email you. I wish you all the best in your trading.